Traders Corner is proudly brought to you by IG Markets South Africa. Visit igmarkets.co.za.
Welcome back. You're watching Traders Corner, Summit's warts and all trading show. As always, I'm joined by Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Juliet.
Garth, this time last week we were saying a lot hinges on what the Fed has to announce. In the end, I think they announced what the market had been hoping for.
Yeah, I think so. I think even more so than what the market had been hoping for. I mean, we were talking about a QE3, quantitative easing, third round. And I suppose what I've seen written somewhere is that it's now QEN. In other words, out into infinity, because what they've committed to is to buy back $40 billion worth of mortgage-backed securities per month until such time as they fix the unemployment problem in the US. So no more QE4, QE5 or QE6. We just carry on with this QE into eternity until things hopefully get better. So certainly I think it was better than what the market was looking for, and the way the markets reacted on Friday after that announcement was testament to the fact that obviously Ben Bernanke really did come up with something special, because the markets rallied very hard on the back of that announcement.
Although I have to say today there has been some news that there were disagreements from some of the other Federal Reserve governors in the United States, some saying they don't think it's the right thing to have done. So it's quite interesting that there was a bit of dissent in the ranks. So I don't know how that will impact on markets. But going to some of the stock picks that we had on the portfolio, Naspers was one of the picks that you made most recently. How did that fare after the announcement?
Yeah, it's worked out very well for us, actually. I'm really pleased about this trade. We've still got it on at the moment. If we have a look at it, the chart of this is up on the screen at the moment. And what you can see really was that I'd identified that we had this major breakout through overhead resistance, which came in at about 475, 478 Rand, that sort of area. And you can see the stock broke out through that resistance in mid-August. And then it spent most of the month of August and into September consolidating in a very controlled fashion. There was actually a gap in the chart on that breakout through the resistance, and the stock came back, retested the breakout level, closed the gap, and it got nice and oversold. What we also had there was an uptrend going all the way back to November of 2011, which you can see I've just drawn in there on the chart. We also had this, as I say, this controlled consolidation, which took the form a little bit of a bit like a bull flag type pattern. So having a look at all of that, and the fact that the stochastic was pretty oversold, as you can see on the top of the graph there, I decided last week to buy for our portfolio at 472 Rand, and we bought 380 CFDs for our portfolio. And the expectation was that we would see a blast out through the top of that consolidation, through the top of that flag pattern, and that has indeed happened. Obviously,
I mean, blast is really the appropriate word to use here, because it seemed there was a bit of a gap there.
Yes, yeah, it's pushed out quite aggressively through that area, through that overhead resistance, which came in at about 487 Rand. So that the break above 487 marked a breakout through that consolidation pattern. And my target here for this trade is 520 Rand. So it still looks like we're on track for that. And I'm happy. So we're going to sit tight. So this trade's working out very nicely for us. And it's really nice to get a trade that works off the bat immediately, because those very often I find are the ones that end up making quite good money. If they work almost immediately, then you invariably know you're onto a good thing.
Do you think Naspers was also to some extent responding to an upturn in Facebook's share price? We had Mark Zuckerberg speaking recently. I think the market seems to be a bit more confident they are going to be able to deliver revenues via mobile, and there seem to be, I suppose, more positive sentiment around Facebook, which must affect a share like Naspers.
I suppose it could, maybe from a sentiment perspective, but Facebook, the Facebook component of Naspers is really tiny. It's very small. I mean, I think if I'm not wrong, it's less than 2% of Naspers, because it's held via all sorts of indirect structures. So it realistically doesn't actually mean a hell of a lot for Naspers, but maybe from a sentiment perspective it could have helped. But I think what really gave it the push was actually more the overall market pushing higher on the back of the US Fed announcement.
Okay, well, how did that impact on Coronation, which is a share which has, I think, niggled because it has actually done very, very little since you bought it? Has that finally started doing what you wanted it to
has,
do.
yeah, it has. I know last week I said I was getting a bit frustrated with it because it was going sideways and it wasn't doing much for us, but it's been helped higher by the overall rise in the market over the last couple of days. So what we had here was a couple of things. We first of all had that overhead resistance at about 30 Rand a share, and I was looking for a breakout through that resistance area. And when we bought this stock back in the beginning of August, I was buying it off the fact that we had that uptrend which went to the beginning of June, and I felt that we would ultimately see a break through the top of that 30 Rand resistance area. And anyway, as you can see, it sort of spent about a month or so consolidating sideways and just around that 30 Rand area without making any significant headway. But you know, we were in at 29 Rand 60 and our stop loss is 28 Rand 30. So the stop loss never came close to being violated. It was just a question of when and if this thing was going to break through that resistance. And now, as you can see, finally we've actually seen a breakout through that resistance over the last week or so, which is encouraging to see. Now, my target price here for this trade is 32 Rand. So if it gets there, I'll start looking to take profits on it. But certainly is working out quite well for us. And I'm glad to see that it has finally broken that 30 Rand resistance, which I expected it to do. But it has taken a while longer than what we had initially thought would happen.
It would be interesting to see how invested Coronation is in the resources sector of the market, because that's really our next point of discussion. Because as we said last week, look for a rally on the resources stocks and commodity prices if the Fed does announce some form of stimulus, and that's exactly what happened. Yes.
Yeah, I know last week when I spoke about it, I said that we were just watch out because there's this sector rotation is a big buzzword at the moment, and I said at that stage, I said I didn't know whether it was for real or not, and we'd have to see because it was a bit early in the day to say. But obviously with the announcement of the stimulus out of the Fed last week, it certainly has helped the commodity prices a bit, and it's also helped our resource shares. And now the big question, as I said, was, is this sector rotation for real or isn't it? Now, I've got 3 charts here today which we're going to look at of some of the larger resource stocks. We've got BHP Billiton, Anglo American, and I'm going to also look at Anglo Gold. And these 3 stocks have all made quite significant breaks of their downtrends, which for me is significant in itself. The resource shares are a bit overbought at the moment, so I think it's probably not wise to be chasing them right now. But if we were to see a consolidation in these shares, then maybe we'd look to buy into that consolidation. So I'm going to go through each of these charts individually and just show a couple of the pertinent points that I think are relevant to talk about here, and then how we can potentially play this in the weeks ahead.
Okay, so you're starting off with BHP Billiton.
Yeah, we've got BHP Billiton as the first chart here now. Now what you can see is it's broken through that downtrend. That downtrend goes back about 20 months. So it's quite a significant breakout. Also, what you can see here is that arrow, where I've got that arrow, indicates that there was actually a gap through through that resistance area. Now, gaps are interesting. They come about because our market is effectively open for 8 hours of the day, and that means that it's closed for the other 16 hours of the day. And things can happen overnight that they need to be repriced when the market opens the next morning. And what happened here was we had, obviously, on Thursday night, the US Fed announcing this massive stimulus program. And on Friday morning, we saw all the Asian markets up between 2 and 3%, and our market then needed to reprice for that significant development that had happened overnight. And that's what caused these gaps in the charts, and you'll see all 3 of the charts that I've got here will illustrate these exact same gaps.
And was it especially pertinent to the resources stocks?
It was more particular to the resources stocks, yeah. A lot of the domestic stocks didn't make gaps like this. Some of them started the day strong but actually ended the day relatively weak on that particular Friday. But it's interesting that we've got these gaps on these resources stocks. And as you can see there on BHP Billiton, we've clearly broken that downtrend. But now what I would expect to happen is that we invariably, when you get a gap like this, very often the gaps do get closed. So you'll find that the stock might consolidate a little bit, and I'd expect some sort of consolidation around here, perhaps a retest back to that breakout area, which is at about 258 to 260 Rand on BHP Billiton, where I've drawn that dotted line in. Also, what you can see here on the stochastic oscillator is that it's very overbought at the moment. So what I'd expect here is that we maybe see some sort of a consolidation to work off that overbought condition, perhaps pull back, close that gap, consolidate a little bit. And if we then get a situation where we retest that breakout area and hold the support, bearing in mind that that 20-month downtrend was resistance, but it'll now become support on a retest, then I think what I'd then look to do is probably buy into some of these resource stocks. And in this case, BHP Billiton is the one that we're talking about here. Possibly look to buy in if we get a retracement and a retest of that breakout.
You also want to talk about Anglo American and Anglo Gold. I mean, are they pretty similar?
They are.
Almost identical, in fact.
Yeah. So this is Anglo American that we've got over here. As you can see, we've had this steady downward trend throughout 2012. Every time the stock's rallied, it's bumped up against that downward trend and failed and gone lower. But now, suddenly we've got the situation where we've got once again, a gap higher last week Friday, and a significant break of this downward trend. So I think it's the same sort of situation here. The stock is overbought, as you can see on the stochastic oscillator there. But if we were to get some sort of a consolidation in this area, and perhaps a retest back down to about 255, 260 Rand, that sort of area, and if we were to hold that support now, then I think I'd certainly look to buy in. What you need to look for here is the emergence of higher lows and higher highs, which would be would mark a change in the trend.
Garth, you have a naturally bullish tendency, so would a bear look at this and say, okay, if it comes back to either close that gap or maybe actually breaks below what has become a support level, would that be very negative for
I guess then you could say that if we broke back underneath that downtrend, then you could say that's bearish, because it would be a false break.
Yeah.
But look, it'll remain to be seen, and we have to watch this in the next couple of weeks. If we think about it fundamentally, I think that the stimulus out of the US it certainly should help to buoy resource prices. And also remember that the resource sector of the market shows, on a relative basis, it actually shows quite a lot of value compared to long-term historical valuations for these resource shares. And then on the domestic side of the market, you've got relatively high valuations. Stocks are relatively expensive compared to their long-term averages. So, if we are talking sector rotation, this to me is evidence that we might now be starting to see the emergence of some proper sector rotation happening. But we will need to watch these charts in the next couple of weeks.
What about Anglo Gold Ashanti? Because that also has different dynamics affecting it, I would imagine.
Yeah, it certainly does. And obviously this stock has been my nemesis this year. I've battled to trade it. But I think finally now we've actually seen a break of the downtrend. If you have a look there, that downtrend that I've drawn in there goes back nearly a year. And what we saw this week, again, a breakaway gap there, and a significant break of that downward trend. So once again, I think what we might see here is a bit of consolidation in this area, and if we were to see the stock pulling back to about 285 Rand and to work off this overbought condition here, then I would potentially look to buy into Anglo Gold again, and perhaps get it right this time if I was to buy it, because I know I've got it wrong the last couple of times I've traded it.
Yeah, break that bugaboo. But the thing is, would Anglo Gold Ashanti and Anglo American or BHP Billiton necessarily rally at the same time? Because Anglo Gold Ashanti is a gold stock. Gold to some extent is a fear commodity. So if there are worries about inflation or the state of the market, and you see the gold shares rallying, it doesn't always imply that it's going to be common to the whole resources sector.
No, it doesn't. Look, they've certainly got different drivers. So I think Anglo Gold certainly is different, and what appeals to me here is that the gold price itself has actually broken out of its one-year consolidation triangle pattern. That's broken to the upside, which I think should be bullish for the gold shares, and particularly Anglo Gold. It's got less South African operations than the other miners that are listed here. Okay,
so 3 shares to watch, well, a whole sector to watch. Garth, given that Naspers and Coronation have performed pretty nicely, what's the portfolio look like?
Yeah, it's looking good actually. I think we've hit a new high for the portfolio now for the year.
Fantastic.
So you can see all of our open trades there, Naspers, Anglo Gold that we closed out recently, and Coronation, and then we've got our put spread structure, which gives us a bit of downside protection, but I don't think it's going to be necessary anymore to have that, but we'll leave it on in any case. It costs us nothing to hold it. The portfolio value is sitting just above 373,000 Rand, so that's up 49% for the year to date. So it is a new high for the Traders Corner portfolio, which is great. I'm very pleased about that.
Bearing in mind, yeah, we started off with 250,000 Rand, so it's been a fantastic performance.
Yeah.
What's the overall market done, just so you can brag?
I actually don't know. I have it a guess. I think we must be somewhere between 5 and 10% up for the year, maybe a bit more. But
I should know this myself.
I should also know that, but I actually don't.
All right, well, next week we can update it. And Garth, just to end off with, 13th of October remains the next course.
Yeah, my next course in Johannesburg on the 13th of October, and if anybody's interested in attending that, they can get hold of me on my email, garth@traderscorner.co.za, or on Traders Corner Twitter, or on Facebook as well.
Okay, great. We have to leave it there, but thanks as always for joining us.
Thanks.
That's Garth McKenzie, the founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG Markets South Africa. Trade the South Africa 40 Index or over 140 share CFDs at just 0.2% commission on our intuitive, award-winning online platform. Visit igmarkets.co.za to find out more.